Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of reverse stock splits, where your shares can vanish like socks in a dryer. We're decoding a recent report from China Pharma Holdings. They're planning something that could affect their stock price and your investment, so stick around to understand what's going on. This report is called an 8K, which companies file to announce big news. In this case, China Pharma Holdings is telling everyone about an upcoming change to their stock. The date of the report is April 4, 2025. The big news is that China Pharma Holdings expects to do a 1-for-10 reverse stock split. This is planned to take effect on Tuesday, April 15, 2025. That means if you own 10 shares of their stock, after the split, you'll only own 1 share. It's like consolidating your money. Instead of having 10 $1 bills, you have one $10 bills. You have one 10-share bill. It doesn't change the overall value, but it changes the number of shares. After the reverse split, their stock will start trading on what's called a split-adjusted basis. This just means the price of the stock will likely be about 10 times higher than it was before the split. If the stock was trading at $1 before, it might trade around $10 after the split. The goal of a reverse stock split is usually to increase the stock price. Sometimes a company's stock price gets too low, and this can make it difficult to attract investors or meet the requirements to stay listed on a stock exchange. A reverse split can make the stock look more attractive. There is also something called an Exhibit 99.1, which is a press release from the company about the split. It basically says the same thing as the report, explaining the reverse stock split and its effective date. Now let's step back and consider why a company might do this. Reverse stock splits often happen when a company's stock price is struggling. The report was signed by Xulin Li, who is the President and Chief Executive Officer of China Pharma Holdings. This means they are responsible for the accuracy of the information in the report. So what does all of this mean? China Pharma Holdings is trying to boost its stock price with this reverse split. It doesn't change the underlying value of the company, but it can make the stock more appealing to investors and help them stay listed on exchanges. Whether this is a good move depends on the company's overall health and strategy, as well as how investors respond. As for the risks or opportunities, reverse stock splits can be risky. If the company's fundamentals aren't strong, a higher stock price might not last. On the other hand, if the company can use the higher price to attract new investment and improve its business, it could be a good move. In conclusion, China Pharma Holdings is making a move to increase its stock price, but the real test will be whether they can improve their business and deliver value to shareholders in the long run. This is something to watch closely if you're invested in this company. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding. Let me know what company or filing you want me to analyze next. See you in the next video.